Do you believe there is a real and maybe permanent change happening with China's leadership around COVID?
Don't know about permanent, but certainly this is a real change and tweaking and refining of COVID policies, especially as we head into the important meetings. Central Economic Work Conference, the 2 sessions in March, these are all very important annual and beyond policy meetings that sets the tone for China's policy making. So very much indeed, the current reopening is here to stay. Now, of course, new challenges will arise, particularly with the new rounds of waves of COVID. So it's going to be a very bumpy road towards full recovery.
Well, it appears that President Xi Jinping and maybe the rest of the Chinese government, Jenny, not only is focusing on COVID, but also seem to be doing maybe a hard turn on economic growth, doing things like loosening up restrictions for property developers, kind of implementing almost a mini stimulus, as you will. It appears, and please correct me if I'm wrong, that they are focusing on economic growth in the year ahead. Would you agree with that?
I would agree with that assessment. What you highlighted in the data released overnight and in recent weeks, certainly in November, we have seen a very stark warning in terms of the economic activity. The COVID restrictions absolutely weighed on sentiment, particularly on investment and consumption. So I think Beijing has absolutely reassessed the situation given this set of evidence. And of course, the slow and gradual reopening means that production, investment and consumption could start to resume. Now, what's important going forward is that the current accommodative monetary policy and supportive fiscal policy stance will remain. And that is the key and fundamental principles going into 2023. Now, market sentiment is very much accelerated beyond fundamentals. And fundamentals are still lagging market sentiment. But potentially this will catch up as the current waves of COVID is being digested. And of course, if we don't have any stalls in terms of that reopening, it is very much likely that activity will start to catch up with sentiment.
I saw some stuff or reports that, try to indicate what would happen with oil demand, et cetera, if China ended up fully reopening. What is your take on China's impact on things like the global markets, global inflation, and oil and natural gas demand? How much would it really change the calculus in the world, Jenny?
Well, certainly commodity markets have already reacted on the back of China reopening and these latest new measures. However, there will be cautious optimism settling into the markets as we realize that this reopening will be a bumpy road ahead. Of course, also Chinese suppliers of commodities as well, and those involved in the supply chain of production will have already started restocking their inventories. So the oversupply and the inventory cycle in China will need to adjust. So I think lots of caution against over-optimism. That said, definitely there are plenty of opportunities, particularly in the sectors mentioned already recently. Yesterday, the guidelines on boosting domestic consumption in the years ahead was released, and very much the sectors encouraged are still very much the high-end manufacturing sectors, the tech-related and innovation-driven, as well as new energy. All of these sectors will benefit from the positive investment flow into China.